It's been more than a year, and there are rumors and expert warnings about the upcoming recession all over. Let's find out how legendary investor Warren Buffett can help you sail through uncertain economic conditions. Despite the resilient economy and low unemployment, a recent article in Forbes still predicts a mild recession in early 2024. For several months now, experts have debated about the possibility of a recession. One cannot forget the March report from analysts at JP Morgan Chase that mentioned about a greater than 50% chance that we're all going to experience a recession in 2023 or 2024. It's indeed true that any sort of economic uncertainty can be exhausting, especially after witnessing the volatility in the stock market in the last year. But guess what? We have solid advice coming from a world-famous investor, Warren Buffett, that can really ease your nervousness and worries despite the weak economic outlook. Back in 2008, during the peak of the Great Recession, Buffett had written an opinion piece for the New York Times with his thoughts on the future of the market. Fear is now widespread, gripping even seasoned investors, he writes. But fear regarding the long-term prosperity of the nation's many sound companies make no sense. These businesses will indeed suffer earning hiccups as they always have, but most major companies will be setting new profit records 5, 10, and 20 years from now. He prompted the idea that the market's long-term performance will always be more important than the short-term up and downs. And you won't be really surprised to note, as the back of your mind, you already know that the great prediction came true. The S&P 500 went on to shatter records and experienced one of the longest bull markets in history between 2009 and 2020. Obviously, past performance doesn't assure future results accurately. However, there's quite a possibility that the market will recover from a tough recession and make an amazing comeback with positive returns. If that is really the case, then get all set to invest in the stock market, but only if you want to follow the pathway shown by the mega billionaire CEO of Berkshire Hathaway, Warren Buffett. Once, Buffett wrote in 2008 op-ed for the New York Times, "Be fearful when others are greedy, and be greedy when others are fearful." This basically means that when others are afraid of investing their hard-earned money before or during the recession, then you should take advantage of the situation by scooping up stocks and other assets at discounted rates. In short, bad news is an investor's best friend, Buffett wrote in the op-ed. It lets you buy a slice of America's future as a marked-down price. The rule is still sounding practical even after 15 years of the Great Recession. Yeah, you heard it right. What you shouldn't be doing right now is actually sitting right there in front of your TV or laptop and predicting when the economy and stock market will recover. That's because even legendary experts like Buffett can't afford to waste their precious time in doing that. "I haven't the faintest idea as to whether stocks will be higher or lower in a month or a year from now," Buffett wrote. What is likely, however, is that the market will move higher, perhaps substantially so, well before either sentiment or the economy turns up. So if you wait for the robins, spring will be over. So how can Buffett really help you out in your present financial crisis? Well, here are a few things that Buffett suggests you start doing right away. According to a report, Buffett told CNBC Becky Quick earlier in 2023 that the approach to preparing for an upcoming recession is to keep plenty of cash on hand so that people are going to keep making intelligent decisions rather than those forced upon them. Well, there's no exception from you to amass billions in cash like Buffett, but you can't simply avoid taking assets that might use up your cash. During the present situation of the economic downturns and stock market slumps, it is a great idea to invest in a company that is established and trustworthy. Be wary of blue chip stocks as they suffer like anything else, and never go for a company that has gone through the business slowdowns or a dip in the share price. Although it's just a temporary hiccup, you can avoid making an investment in such companies. You can play safe with a normal game plan. Buffett was quoted telling CNBC that he considers taking a business-as-usual approach before a recession. It means you should not stop investing drastically, but at the same time, don't go overboard with investments in stocks that you wouldn't do in a normal situation. "We just want to buy good businesses run by people we like and trust at a decent price," Buffett told CNBC, and we'll keep doing that. It is quite tempting to put all your money in a risk-free checking and savings account, but let us tell you, they really don't have any growth potential. And that's why it's better if you avoid putting all your money into no-growth assets before the upcoming recession. As Buffett wrote for the NYT, equities will almost certainly outperform cash over the next decade, probably by a substantial degree. Some recessions do last longer than others. However, you should note that all these economic situations are just temporary. In comparison, the stock market has witnessed a decades-long pattern of rising upward over time. This trend was noticed even after the Great Depression of the 1930s. The economic doldrums or soaring inflation of the 1970s and early 1980s, the Great Recession of the 07 through 09, and the COVID-19 pandemic earlier this decade. So ideally, you should stop getting panicked if your investments go down considerably before or during the recession period. You need to adapt in the mindset of Buffett and realizing that the stock market will surely go up again because history has proved that it always does no matter what. It hints that once the worst period is dusted and done, the stock market will surely start to recover before the economy begins showing improvement signs. So in case you're waiting to invest until the recession is done, you are actually missing out on the early stages of the next bull market. For this reason, Buffett motivates investors to keep buying even during the market's rough patches. I haven't the faintest idea as to whether stocks will be higher or lower a month or a year from now, he writes in the Times article. What is likely, however, is that the market will move higher, perhaps substantially so, well before either sentiment or the economy turns up. So if you wait for the robins, spring will be over. So are you wondering how to choose the best stocks that survive even during the recession? Well, turning to Buffett for advice, we got an important note that he had shared in Berkshire Hathaway 2021 letter to shareholders. He had revealed his and business partner Charlie Munger's approach to selecting stocks. We own stocks based upon our expectations about the long-term business performance and not because we view them as vehicles for timely market moves, he writes. That point is crucial. Charlie and I are not stock pickers, we are business pickers. So what do you learn from Buffett's approach? Well, the best stocks are the ones that come from healthy businesses that have laid down solid foundations, such as a strong financial and competent leadership terms. These types of companies are more likely to remain intact even during economic downturns. And the more such stocks that are there in your portfolio, the better off you're going to be financially. If you're thinking if an expert like Buffett knows how the market's going to fare over the coming recession hit months, then let us tell you, even he is not aware of the same. He only hopes at the possibility that things will get worse before they become better, but he assures that things will get better for sure. He suggests that by sticking to your investments in the right stocks and companies during the low points, you're going to surely enjoy the rewards when the market recovers inevitably. During recession periods, several stocks are still priced well below their peaks, so investing now can help you snag high-quality investments for a fraction of the cost. It means when the market rebounds, you can start earning substantially. A simple rule dictates my buying. Be fearful when others are greedy and be greedy when others are fearful, Buffett wrote in the Times article. No doubt that market downturns can actually demotivate buyers, especially if prices still have further to drop. But by investing during the low points, you're going to be in a wonderful position to take advantage of the upswing. For instance, say you had invested in Amazon in late 2008, during the lowest point in the Great Recession. At the time, its price was down more than 65% from its high. But in the following 2 years alone, the returns for the buyers were more than 370%. Obviously, not all stocks will provide you with Amazon-like returns, but nobody can really guarantee you what the recovery period after the downturn will appear like. Do you agree with the views of Warren Buffett to help you make profits during the recession? Share your views with us in the comments. Like our video and subscribe to our channel for more such interesting updates on finance.